Welcome to the Retail Focus Podcast, a weekly collection of news, interviews, and information from the world of retail. Here are your hosts, Trent Kling and Leighton Kling.
Welcome to this edition of the Retail Focus Podcast. Trent and Leighton Kling with you. Today we'll discuss various first quarter earnings releases, including that from Ulta and Big Lots. We'll also talk a little bit about GameStop, their earnings, and what that means for the company. Our interview guest, very excited to be joined by Jason Marietta for this show. He's with Jake's Fireworks, one of the largest fireworks retailers in the United States, and he'll talk about the process that the company will undergo over the next month in setting up all of these fireworks stands and making sure they are compliant with local, state, and federal regulations. But our first story, it was announced this week that Target will allow a pilot program with the company Curbside to expire. Essentially, what this pilot program did was in certain markets throughout the U.S., 6 different markets, you could order merchandise through the Curbside app and then pick it up at the curbside of Target retailers in those markets. Interesting interview with Target's digital chief, Jason Goldberger, earlier this month. We'll get to more of that interview in a moment. But first, Leighton, we talked so much about omnichannel and companies moving towards omnichannel. It's somewhat rare when we see a pilot program like this allowed to expire where it looks like a company is moving perhaps a little bit farther away from omnichannel.
Yeah, last month we spoke about brand loyalty and what it really means to have a service like Curbside set up within your retail location. So you're seeing a lot of larger retailers like Walmart kind of undergo this process and expand their pilot program. So it's interesting to me to see Target actually not only downsizing, but eliminating the Curbside pickup program altogether. So this is new for Target. Like we said, it is a pilot program, but it started in August of 2014 just in the San Francisco Bay Area. And throughout the months after that, they did expand the program to many other markets, like you had mentioned. New York, New Jersey, Chicago, Philadelphia, and Los Angeles were in there as well. So you're looking at 121 stores total that are going to be shutting the program down. But as you had mentioned, Target was really focused on making sure that customers knew that other programs were still going to be enacted and proceeding forward with new developments in the future. They're still having the online pickup process in order in the stores. They just are no longer having the curbside delivery function of that service.
I think this is something where Target looked at this and said that they can vertically integrate some of these things that Curbside was bringing to the table. And eventually, when you look back at the 2014 releases for this, back in October of 2014, when press releases initially came out touting this partnership, Curbside said that they wanted to move away from having Curbside employees at these locations at the curb and wanted to move towards Target employees. And I think when you look at what Target wants and look at what Curbside wanted, Target probably took a glance and said, hey, we've developed enough omnichannel in-house and this technology in-house to perhaps tackle this program ourselves rather than use a third party coming in. One of the interesting things I found from looking back at these releases in 2014 is that this expansion was originally planned for 15 different markets in 2015 after the initial Bay Area or San Francisco market in 2014. Well, we saw a third of those markets actually materialize with New York and Chicago, Philadelphia, Los Angeles. So when you look at a program that was ticketed for 15 markets and only managed to be released in 5 markets, it really raises some questions. You know, Curbside was founded by Jason Waldman, who was a former Apple engineer. And I think an interesting thing from Jason Goldberger's chat back in May, he said a lot of companies that Target attempts to work with can't handle the scale that Target needs. Target has 25 million visitors per month on their website. And in order to handle not only the scale in terms of the number of possible customers accessing an app and that type of thing, and also the scale in terms of the number of outlets, the sheer amount of stores that Target has, I kind of, once you decode this language, wonder if perhaps Curbside wasn't up to the task of perhaps handling the scale that Target needed, and maybe that's why Target chose to perhaps bring this program in-house and bring their site to store more vertically integrated within their organization.
I would have liked to see more data as to how many users of their online shopping network use the curbside service. But it seems to me that there actually wasn't much of a demand there. And I think that honestly, if there wasn't a good performance with the curbside service, maybe they're thinking that, if people come in the stores, even if it were to just pick up an online order, maybe they were going to shop actually in store as well at their brick and mortar locations. So Jason Goldberger did point out back in May that 4 to 5% of total Target sales happen online. When you look at in regards to total revenue, it's not a large chunk of sales that are happening online. And so then you have to look at that with a microscope and kind of see that, well, only part of that 4 to 5% then is going to translate into curbside pickup. I think possibly it was something that they maybe even viewed as a liability rather than a branch of customer loyalty and expanding that service. So I think that this is probably something that you're going to see expand in other areas of retail and yet kind of compress in this larger state. But to my point earlier, when you look at Walmart and how they're expanding it, especially with their grocery segment, they're really pushing it in neighborhood markets in areas of the East Coast and Northeast. You're seeing that people are really wanting the convenience of having things picked up curbside. So I don't understand that as opposed to getting things delivered to your door. Target also said in a different statement that they are still delivering from their stores to your resident. They're trying to bring logistics together and try to create some efficiencies through that way. But you're also seeing retailers like Kohl's, for instance, not having an online pickup option whatsoever, not a curbside pickup and not an in-store pickup for online purchases. So you're seeing them only sending online orders to your residents. I think it's going to be very interesting to see how this plays out with the different kinds of retailers. And obviously, Target does have a grocery segment, so they might be missing the boat here. But again, I think they probably ended up not seeing the numbers they had anticipated.
The other thing, when you really break down this program and this curbside pickup program, you look at the markets: Bay Area, New York and New Jersey, Chicago, Philadelphia, Los Angeles. Those are major metropolitan areas. Now, Walmart expanding curbside pickup with their neighborhood markets and some of the super centers, but you're more likely to see those neighborhood markets in suburban areas rather than in downtown areas or more urban areas. Target has done a really good job in terms of being able to adapt their footprint, create these Target Express formats and the smaller Target stores in downtown areas where honestly curbside pickup isn't that big of a deal because your market in those downtown areas, in those highly urban areas, likely going to be people that are walking to the store anyway rather than driving. So I can see how the utility of this program would be somewhat limited in those larger metropolitan areas for Target as compared with Walmart. Also, we associate Target less with groceries than we do with Walmart, especially with the neighborhood market store format that Walmart has. I do think it is curious that right now only 4 to 5% of Target sales are online. This doesn't necessarily dovetail with a lot of the other numbers that we're seeing from the retail sector in terms of movement to online sales. But one final note about this story, mentioned that Best Buy is a curbside client. Curbside, when this program rolled out in 2014, they said they had all kinds of retailers and shopping malls and that type of thing lined up. And I don't know that much of this has materialized for curbside, and that's why in retail, we take so many of these programs and these new startups with a little bit of a grain of salt. It's great if you can raise money for startups and that type of thing, but you really do need the scale that can match some of these larger brick and mortar retailers in order to have success as a startup in this sector. That's one of the reasons Walmart uses in-house programs for it, and I think that's the way Target's moving in the future as well.
Yeah, scalability and logistics are certainly an integral part in this kind of process, and it's only going to grow from here. You're seeing, like you said, Best Buy having pilot programs being rolled out and expanding curbside locations. So hopefully in the future, we'll see where this lays out. And at the same time, Target is focusing on fundamentals of merchandising. They just made a new relay for their entrance at a pilot store to try to bring in customers focusing on fashion detail. Well, Trent, you spoke about first quarter earnings announcements. Ulta Beauty announces first quarter earnings that absolutely exceeded expectations with beats on almost every notable figure. They've increased in revenue, they increased in earnings, and they increased in the total store count, Trent. Where do you see their growth from here? It looks like they beat Wall Street expectations as well, as their shares jumped almost 14% when they announced last Friday.
Their growth really is amazing because in the first quarter, you would expect with this type of growth that they would have opened a ton of locations. They only opened 13 locations in the first quarter and closed one. So you're not really seeing growth necessarily from those newly opened locations, but rather in same-store sales, along with getting some benefit or limited benefit from increased numbers of locations. Right now, they're sitting around 880 locations, in fact, 886 stores as of the time we're recording this podcast. They want to open or attempt to open 100 net stores in fiscal year 2016, which is very ambitious for a company that has seen explosive growth since they hit the market over the last 10 years. But it's interesting that you're seeing these comparable store sales increasing by leaps and bounds, nearly 14%, 13.9% over first quarter of last fiscal year. And this is in a sector where you would certainly think that e-commerce would be taking some of their sales away. But the nice thing about Ulta as a company is because they're a relatively recent company, they have grown with e-commerce. And so you're seeing a 40% growth rate in the first quarter of this year announced in sales through their e-commerce platform. So they've been able to savvily build their e-commerce platform, and it's worked very nicely with an increase in store traffic, an increase in same-store sales, as well as their salon sales that are located within the stores. Redesigned stores many times throughout the company's history. Now they have a more open floor plan where the salon is visible from the store. And you're seeing, I think, a lot of tie-ins from customers that are actually shopping in the store and then customers also visiting at the salon instead of customers only doing one thing or the other.
It's funny you had mentioned expectations in retail. A lot of people have been quite bearish on overall retail, and I think Ulta actually beat their own expectations. When you look at comparable sales growth, they're going to estimate between 10 and 12% for second quarter fiscal 2016, and this is actually bumping up their previous guidance that was between 8 and 10%. So I think they're even surprised at the impact of the overall e-commerce business. They also expect to keep e-commerce sales in the 40% growth range. Again, they hit a little bit above 38% if you're looking year over year for first quarter 2016. So this is amazing. To me, this is really a company who understands their online business and their brick and mortar business. You're looking at approximately 11% square footage growth when you're talking about the opening of 100 net new stores, and that includes the 13 locations they opened this last quarter, and they're also going to remodel 12 locations. So they're really focused on keeping their brick and mortar stores happy and healthy, and they're really trying to focus on the customer service experience. You see a lot of their competitors, such as Sephora, doing the same thing. They have an aura of expertise when you go into a store, and that's what I think people in their target demographic love to experience. They like to go in and feel confidence in what they're buying and like to look at new products, feel new products, smell new fragrances that they might be selling. And so you're seeing really this translate also into online sales. People see a lot of things they like to buy for the first time, and then they're going to have that translate into online growth later on down the line when they are feeling more comfortable with the product. I think this is a really good dynamic for Ulta, and I think honestly you're going to see this represent in future growth as well. They're talking about profit increasing even in the second quarter, meeting the metrics that they met in the first quarter. And so you're really seeing a store that's really strong here and that has a lot of growth potential. You're seeing a PE ratio of about 47. So that's kind of indicative of a company that investors see as growing in the future, but I personally think it could be a little higher.
Positive signs from Ulta. You mentioned not only do they want to open those 100 net stores this year, but they talked about remodeling 12 existing locations. That's the sign of a healthy retailer. We've talked in the past about when retailers are really struggling to find their way, or when retailers are having issues with stagnating sales. Oftentimes, updating store infrastructure is the first thing to get cut from the budget. In this case, they're working hard to make sure infrastructure is up to date. When you look at when Ulta first hit the stock market, little under 10 years ago, they began with about 7,500 in square footage per store. That was about 10 years ago. Now their average square footage is 10,000 square feet per store, which is already pretty big for this particular space. But then in their new stores, they want to try and expand their square footage, bring it into the neighborhood of 11 to 12,000 per store, which is much larger than some of their main competitors. You mentioned Sephora. I also look at Sally Beauty Supply as one of the competitors in this space. Their average square footage is just about 1,500 to 2,500 square feet per store, so a much smaller footprint. And in an era where we're talking about retailers reducing their brick and mortar footprints, their physical store locations in terms of size, Ulta is one of those rare companies that's actually expanding in size, and they're finding effective ways to fill the space, including in-store boutiques. So I think you and I are both somewhat bullish on prospects for the company, not only in terms of whatever the stock market might see, but also just in terms of continued sales growth. And this is a company that seems to know their target demographic, and they are able to fill store shelves in an effective and attractive manner to the customers that they do bring in a brick and mortar sense. Plus, they're growing their e-commerce platform, which is always a good thing.
You talk about expanding the store footprint. Average inventory for Ulta increased 14.5% compared to first quarter 2015. So within the larger store footprint, and even the stores that are remaining the same size that aren't being remodeled, you're seeing that they're increasing the amount of inventory in the stores. They're listening to customers, knowing what to stock. And then also, if you look at their amount of stores last year, they increased 89. So them opening 100 for fiscal 16 is an increase year over year when you're looking at growth as well. Not only are they creating value for their customers, they're also creating value for their shareholders. You look at their share repurchase program. They're actually going to be on an accelerated share repurchase agreement with Goldman Sachs to purchase $200 million in common stock. So they're really trying to deliver value to not only the customers that we have mentioned, but to also the shareholders as they continue this growth process.
When you look at not only a company in Ulta that announced positive first quarter earnings, but you have another one in Big Lots who also mentioned positive first quarter earnings. And after a while, it's not so much an outlier, but a trend. You see every story regarding positive first quarter earnings saying it's bucking the negative trend of retail. It seems like there's a lot more companies growing than shrinking at that point, especially with announcements over the last couple of weeks. But anyway, when you look at Big Lots, they mentioned that they beat on both earnings and revenue for the first quarter in their earnings release. 82 cents per share. Revenues grew 2.5% year over year to $1.31 billion. When you look at the earnings of 82 cents a share, that compares favorably to Wall Street's expectation of 70 cents a share on revenues of $1.3 billion. So both numbers, both overall revenues and earnings, came in above Wall Street's estimates.
Yeah, and you talk about beating expectations, and we spoke about this earlier with Ulta. We actually see with Big Lots them beating their own expectations. They had listed guidance for 62 to 72 cents per share, and again, 82 cents is a beat on their own guidance. So you're looking at a surge of more than 14% that their shares experienced Friday when they announced this news. And again, an earnings beat also translated into a revenue beat. $1.31 billion, as you mentioned, a 2.5% growth figure from a year ago. And then the number that I really wanted to look at, Trent, is same-store sales growth, 3%. You know, when we're looking at the 3% number, we've reported on earnings with several other companies. When you're seeing in the positive range, that's good, but 3% means the company is healthy, the company is growing, and the company knows their business. And the other thing I wanted to take away from the profit aspect of the company is that inventory costs were down. They're understanding their supply chain a little bit better. They're understanding their cost management a little bit better. And, you know, last year and the year before, they had devoted some time into closing some underperforming stores that weren't really really lagging too far behind the better ones, but they really wanted to focus on the stores that were performing well and understanding their markets where they could have the most success. And I think you're seeing this translate into successful first quarter numbers for Big Lots. Big Lots has operated 1,448 stores, and they're actually looking to expand that this year, but they didn't give an exact number of what their target store count will be. But again, guidance for the second quarter, same thing with expectations. They're up their guidance for fiscal 2016. For the year, they are estimating $3.35 per share to $3.50 per share against a previous guidance of $3.20 per share and $3.35 per share. So this represents a growth of between 11 and 16%. This is really good for Big Lots. I see a lot of key areas. We talk about how they're growing within their grocery segment, how they've added a lot of freezers and coolers within their individual locations. But actually within this segment, you see the biggest growth with their furniture categories. Mattresses, upholstery, and case goods. And case goods encompasses bookshelves and other means of storage. So this is really good for Big Lots. You're talking about expanding their grocery segment. Well, it looks like they've really honed down other segments as well, and they're all performing at the top currently.
Their operating profits increased $10 million in first quarter 2016 versus first quarter 2015. So a significant increase from about $52 to about $62 million quarter over prior year quarter. And that's something that's interesting given Big Lots' plan over the last couple of years. You saw they exited Canada 2 years ago, so they cut down on their international locations. And as you referenced, they've started to cut down on some of the stores that perhaps aren't as profitable. And so we've seen a little bit of an increase in terms of margin. But usually when chains, outlets, stores cut down on underperforming stores, we see a little bit of a hit in overall revenue. We're not seeing that with Big Lots because their same-store sales did increase by 3%, which was enough to offset their store closures. In fact, when you look at Big Lots, you really haven't seen new store announcements in a big way since 2014. So if they are able to expand in 2016, it would be the first time they're able to do that in a couple of years. They focused on weeding out some of their underperforming stores. This has not produced an earnings decline like it does sometimes, so that's a positive sign for the company. I think there are some lingering questions regarding their new e-commerce platform. They're one of the only off-price retailers to offer an e-commerce platform, and time will tell in terms of how effective that is. They're still working on the kinks, and that's something that they hope will grow throughout the second quarter of this fiscal year all the way through the fourth quarter of this fiscal year. But they've focused on same-store profitability, and this is one instance where a retailer trimming their overall store count down to a manageable size has managed to increase their focus on their same-store sales, on not only the furniture, as you talked about, but also their edible products, their consumable products, as well as their overall product mix as a whole. The last Big Lots stores that opened in 2014, much like Ulta, has increased their store footprint. Big Lots did so in 2014 as well. And were they to open new stores during this fiscal year, I would wager that those stores would be increased in terms of square footage in order to accommodate their new product mix.
Moving on with first quarter earnings from GameStop, it looks as though they met their own guidance and as well as Wall Street's expectations, yet the stock fell about 6.5% on the quarterly report last Friday. Sales declined a total of 4.75%. It looks like earnings actually came in at the high end of guidance at 63 cents per share. The company had anticipated guidance with 48 to 63 cents per share. So coming in at the top end of profit there, Trent, but overall revenue is on the decline, and this is actually not looking good for GameStop as they're trying to manage their dynamic between online and brick and mortar sales.
And this is one instance where what we saw from the stock market and the stock reaction, which is about a 6.5% fall after the quarterly report came out, doesn't really dovetail with the pessimism that's already built into the stock. They have a market cap of $2.91 billion, and I think Wall Street kind of knew that their sales were going to decline. GameStop admitted as such in their expectations in the company guidance. But here, GameStop actually ends up, as you mentioned, at the high end of company guidance, yet the stock still falls. We knew, as did many other people that study the sector, that GameStop sales were going to shrink. But keep in mind that in the second quarter, GameStop expecting to possibly finalize a couple of acquisitions, a total of 400 AT&T stores, and they're looking at increasing some of their cross-marketing ability in addition to kind of building their e-commerce role. So you're looking in terms of their guidance for full fiscal 2016, they reassessed and they expect same-store sales to either be even or be reduced by -3%, which is not altogether terrible considering where they were at the beginning of the year, where some people maybe expected them to lose as much as 5% in revenues year over year.
Yeah, absolutely. And I think, there is growth opportunity for GameStop. You talk about the acquisition of 400 AT&T stores. The company issued $475 million in senior notes. So they are definitely having a positive outlook on the growth prospects for the company. I think there's a few good things here. They met expectations. This isn't like sales declined more than they thought that might happen. But honestly, I think if you look at their overall store footprint, these stores are manageable in size, and I think they really know their target market. And so I think this also is attributed to the lack of big names within the gaming market. Not a lot of big game titles came out in the first quarter, so this definitely hurt sales. But I think, again, another bright side is that the profit topped guidance. And so you're looking at sales that are maybe slumping a little bit, but you're looking at stores that are going to be a little more efficient inside and outside. They're saying that inventory management has been boosted, and that also they reaffirmed guidance for fiscal 2016 on same-store sales. So no further declines there. They're estimating between 0 and -3%. And so you're seeing that when a lot of good titles come out in the coming year for fiscal 2016, you're looking at a positive trend possibly. And if they are able to beat negative same-store sales comps, this could be really good for the GameStop stock. But again, the e-commerce, something that we've been driving down with this segment. Amazon has a growing presence with game rentals and with all the newer titles. And so this is something they're really going to have to come up against. Amazon is trying to relay a lot of their marketing, really focus on the gaming market and trying to build brand loyalty within that. And that's something that I think GameStop has kind of been wary of. They haven't really been focusing on the e-commerce segment as I think they should have. Honestly, if they were able to bring the two together, I see an upside for GameStop.
And not only, as you mentioned, not many big titles coming out in the first quarter, but also no new hardware releases either. So you see a 29% decrease in terms of new hardware sales because people that are going to buy the new hardware have likely already done so by this point, and you're getting to the point of market saturation without any new releases. But I do see a positive future for GameStop in one regard. In the broadcasting community, it's well accepted that esports is one of the largest growing spectator sports in the United States right now, and it's certainly exploding worldwide in places like Japan, China, and South Korea. And so if GameStop can piggyback off of the popularity of esports and find a way to kind of monetize this newfound interest in esports, they can possibly turn things around sales-wise. Again, sales declined 4.3% for the first quarter. Their overall yearly same-store sales expected to be even all the way down to -3%. Yet their stock is down 33% for the rolling 52-week period. They do release a pretty solid dividend, however, but still, stock declining 33%, even though sales are more or less stagnant given the other market conditions in the gaming industry. I think GameStop doing a pretty solid job of being able to tread water while there aren't any new titles or big new hardware hits to the market in this first quarter. Well, we're going to wrap up our news segment today by talking about Facebook. It seems like news of Facebook is everywhere. They're playing an increasing role, in fact, with retailers and their target customers, both in the ways retailers market their products and in terms of retailers being able to advertise their products to Facebook users.
Yeah, it looks as though Facebook has implemented a bot system where people are, in the future at least, going to be able to interact with Facebook businesses that promote on Facebook. Over 15 million businesses use Facebook to promote to their consumers. And you can do this in a number of ways. You can either like the business, you can interact with the business, view promotions of the business at that point in time. One of the interesting things that I found was this software is going to be able to converse with the users to help with the retail purchases. So if a customer, let's say, has a desire to find something in a particular size that they have not been able to find, they should be able to have an interaction between that business through an artificial intelligent means. So this is going to be interesting going forward. And I'm curious if this is really going to draw people into the business that aren't already there, or if this is really going to increase sales from new customers. And I think when you're looking at this example of Kohl's finding a video of a girl wearing a Chewbacca mask and then offering her a pile of Star Wars goodies, this also plays into the role that they're trying to put out there with the video service that they have. You're seeing Facebook really try to promote their businesses in a number of ways. You're seeing this new software where artificial intelligence is going to be able to communicate with retailers, but then you're also seeing a different dynamic where retailers are able to look at their individual customers, see what they like based off of their profiles and what they're posting actively, and then try to offer things based on those consumer interests. So I think there's a couple different ways that Facebook is really trying to implement retail usage here, and I think this is going to be an economic imperative when you're looking at retail in the future.
With Facebook, as with any form of social media, it's a great marketing tool for retailers as long as it's not invasive. As long as users of social media don't find this artificial intelligence methodology with these bots that seek out customers of certain stores invasive, I think it's going to be a positive development overall for retailers, and it's going to open up ways to market to customers in a way that they otherwise haven't. I know Twitter has long experimented with a way to influence their social media users into one-click buying. This isn't that for Facebook, but this is more just a way for companies without having to pay a service representative to interact with the customers and to build brand loyalty. That's the biggest thing. You can get a lot of positive PR from social media and a lot of negative PR too, of course. There's the other side of the coin. But more than anything, a company like Kohl's, in this circumstance that you mentioned, what they're trying to do is build brand loyalty. So not only around this girl on Facebook and her family, but also those that read about the news story, that see the news story on your major news outlets, Yahoo, MSN, that type of thing. And that type of brand loyalty that is driven through social media and clever and creative social media marketing. You can't put a price tag on that. That is so much more valuable than just rolling out a television ad campaign or a radio ad campaign or a newspaper ad campaign or purchasing the freestanding inserts. The more you can build on that brand loyalty and make your company look less like a company and more personable, if you can personify your company's image, that's where it's going to benefit. And I think this technology, as long as it's personable enough, will assist in that brand development for businesses that use it.
Yeah, I think social media engagement is obviously very important for businesses in the future. And so retail is going to try to capitalize on every facet they can. And I think with these new exploits that Facebook is putting out there, I think this is just another way to interact with your consumers and then really feel like you're being authentic. You're not just some corporation from afar that promotes blindly in terms of television advertising or the like, but you're seeing a more intimate experience with interacting with customers' videos and then what their tweets on Twitter, if you're liking them. I know Chipotle has a really good brand loyalty gained from their Twitter account. They interact with almost every message that has their Twitter name in it. So it's one of those things that you're going to see in the future. And I think for me, it's curious to see what businesses are more likely to use it and what businesses are able to profit more from it. When you talk about Kohl's, obviously you're talking fashion and those kinds of things. And then when you talk Chipotle, you're talking restaurants and food retail, and what companies are really going to be taking advantage of the services that Facebook provides, as well as other social media accounts as well.
Next up on the Retail Focus podcast, we'll talk with Jason Marietta. He is with Jake's Fireworks, one of the largest fireworks retailers in the United States. He'll tell us about getting ready for the big July 4th push and assembling all of their retail outlets, and also what they do with some of their retail outlets that are permanent fixtures when it's not July 4th. July 4th is about a month away, which often means celebrations, cookouts, and the like for those in the U.S. July 4th also means fireworks. Annually, the fireworks industry in the U.S. generates over $800 million in revenue, and retailing fireworks is a major economic driver in the summer months. Joining us to discuss the retail fireworks industry is Jason Marietta, the retail sales director at Jake's Fireworks, which is the leading distributor of wholesale and retail fireworks in the United States. Jason, thanks for joining us today.
Absolutely. Thank you for having me.
Well, to start out with, many of our listeners might not be familiar with Jake's Fireworks. They've probably seen the brand's world-class or cutting edge, perhaps. Can you start out by kind of explaining what Jake's Fireworks is, what the organization looks like?
Absolutely. It basically started here in the back of what used to be the Lone Star Army Surplus store by my grandmother and then by my dad and my uncle. And it basically grew. My dad and my uncle were school teachers, and this was a great way to earn income on the side. And it's basically, we've grown and grown, and it's a family business. And now there's my cousin Mick and myself and my dad and my uncle, and we now are the largest importer of fireworks in the U.S. and the largest wholesaler in the U.S., along with retail operations across 11 states right now and warehouses that basically ship all around the world.
So a fairly large organization. In terms of your retail space specifically, about how many retail locations do you have that you set up for the July 4th holiday?
We have approximately 65 brick-and-mortar stores, along with about 400 seasonal tent and stand locations that, are open for approximately that 1 week leading up to the 4th.
And so with all of these locations, it's a massive amount of locations. There are brick and mortar retailers that have that many locations that have worked to have those for 20, 30 years. But you guys are concerned with, setting up the tents and getting them torn down within a month's time. Where does the process start to get ready for the 4th of July? What does that all entail?
Well, it actually starts more than a year in advance with trying to place the order to China for the next upcoming year. And so, utilizing the ordering process and trying to get all of those things so that China gets a jump on it to then try to produce it, because you have to think about it globally. You've got the European market, which is huge into New Year's, but then you've got Guy Fawkes Day in England, and you had Victoria Day just recently here in Canada, things like that, Diwali, all kinds of those holidays that then China's not just looking at it from the U.S. perspective, but from a global perspective, and so you have to try to get your order in way in advance to then get it out so that, you have fireworks coming in January, February, March, for the upcoming 4th of July season.
And so in terms of getting those fireworks ready to go out to those retail locations, what does the schedule look like there? And also, how are those retail locations run? Are they corporate owned? Are they franchised out?
They actually are independent contractors that operate each location. And so they run it, and sometimes it's, a group. It varies there, but they're actually independent contractors that operate the location, and they decide, when they're open and things like that. They basically, purchase the fireworks and then return them at the end of the year. They're running it, basically for their group for that short period of time.
All right. Again, Jason Marietta, the retail sales director at Jake's Fireworks, joining us today. Now, whenever you talk fireworks, it's much the same as when you talk about certain other retail industries, in that there are regulations that differ and change from state to state. Of course, you have the federal regulations, but you have the state and local, sometimes county regulations as well. How do you go about kind of informing all of those independent contractors, as well as those people within Jake's Fireworks, before they go out and before they try to sell prior to the 4th?
Absolutely, yeah, and you're absolutely correct. It does vary from state to state what's allowed, and then even from municipality to municipality. Some don't allow shooting at all or the sale within the city. Some allow it where in Michigan, for example, I can set up wherever I want to be on a brick and mortar store, but then on tents you may have a zoning issue, but that would be the only thing. But for example, the state of Texas, very few, if any, cities actually allow the sale within the city limits. So you just have to try to let the group know every regulation, and obviously that's what, people often wonder, well, what do you do in January when the 4th of July is 6 months away? It's things like that, and, knowing the permitting process and what is going to be required for you to be able to safely operate a fireworks location.
Does that affect your product mix at certain stores too? Can certain fireworks be fired off in one location but not another? And if so, how does that affect the distribution process?
Correct. You have to be very, very careful about what you do. Certain states, say for example, the state of North Carolina only allows what they call safe and sane fireworks, which means anything that goes in the air or goes boom is not allowed. But then right across the border in South Carolina and now Georgia, which recently opened up, they allow everything. But then, say for example, here in Kansas, they don't allow what many people call penny rockets or bottle rockets, but the state of Missouri does, and Arkansas does. Oklahoma does not. And so you just have to try to very carefully put it in your order pulling process for those locations that this is allowed, this is not. And it's, again, a lot of technicalities there that you have to try to be aware of.
So let's take us up to the couple of weeks prior to the 4th. Let's say you're opening up a fireworks tent in Georgia. What's the typical schedule look like for one of those independent contractors opening up a fireworks tent prior to the 4th of July?
Typically, you're going to open up maybe that week. It depends on the weekend and the location, but ballpark 8 to 10 days before the 4th of July, you're going to open up. You're going to receive the product, get it laid out, get your price cards up, your register set up, all of those things. Some cities will require a local inspection, so you have to have the local fire department or somebody like that come out, check it, say, yes, they've got their fire extinguisher, your travel distances are good, there's no, trash, all those kind of things. And so then once you get through that process, typically business is somewhat slow as it builds up to the 4th of July, but then starting around the 1st of July, you see a big uptick, and then obviously building to a crescendo with the 4th of July as far as the number of customers that you see at your location.
How much has it changed over the last few years? We've seen a lot more with mobile card accepting technology and credit card accepting technology now versus maybe 10 or 15 years ago when you had to have, if you were accepting credit cards, some sort of a wired telephone connection.
Absolutely huge. We use a point-of-sale system at all of our locations now, so no more the old Royal cash register and everybody having to try to figure out the price and marking it on the item. Now at the point of sale, you scan, it puts it in the register for you just like you would at Walmart. On the credit card end, everything now is wireless, so no more landlines, which has really made our lives a lot easier here because try imagining getting a phone line hooked up to a field outside the city limits of whatever town you're in, where there's just a field and some rock and a power pole. Those are not easy things to direct a phone company to get to. And so, yeah, it's changed huge in that respect of it, the business end of it, tremendously just in the last couple of years.
And probably no address as well with some of those more rural locations, which might make things even more difficult. So you set up the fireworks tent. Then what happens after the 4th of July? What happens after that holiday and after the fireworks are sold off?
Basically, you come back in, you repack or inventory the items, you put them in a specially designed and approved DOT box. Department of Transportation has a repacking box, is what you would say, that you have to have tested and approved. You seal it the correct way, you bring it back into the warehouse, and then you've got that inventory that then is good for years and years and years, and so then you're going to inventory that based off of then what you originally sent the customer, and there's the accounting process then would take place, but then you bring that back into the warehouse, and then you'll basically utilize it again for the next upcoming season, normally New Year's for us down in South Louisiana.
Well, and that's one of the other interesting things, because I'm sure it's not like, say, taking a bunch of bottled water and warehousing it or storing it away as inventory. I'm sure there are a number of other regulations, too, in terms of how these fireworks are stored from season to season.
Absolutely. The main thing is just keeping them dry and in good condition, and that's really the key to it. Thank goodness, just the way they're now made and produced. As long as you can keep them in a dry and not a really wet environment, you're good. You're in good shape.
I want to go back and touch on one of the things that you mentioned early on. You mentioned you had about 65 brick and mortar structures. You use them to sell, obviously, fireworks out of around the 4th of July or around New Year's. What are some of the ways in which you use those facilities, which are relatively permanent in the fireworks off-season?
Well, that's the million-dollar question. If we could figure it out, we wouldn't have to worry about selling fireworks all the time. That is a difficult one, to be honest with you. A couple of the things that we have done, like, for example, just now, we have certain flower shops that rent them for Memorial Day flowers. And so, like our store here in Pittsburgh or over in Aurora, Missouri, locations like that, you have seasonal sales, whether it be for Halloween or like for Memorial Day, those kind of things. We do that. And then also in some of our larger stores where you have the room, we have gone to inflatable bounce houses for kids where they can come in and have birthday parties. We utilize that a lot out in the Wichita area, and I've had a lot of success with that because we have large open buildings that then, in the summer, most people aren't wanting to go to inside activities or wanting to do outside activities, whereas in the winter here, obviously we're not selling fireworks in them, and so that's been a really nice thing for us to utilize.
And you mentioned something else that obviously is of interest. You mentioned the air conditioning. How much of a benefit are the brick and mortar locations, since many of your retail locations are in places where it's going to be awful hot during the 4th of July?
Absolutely. Customers look at that, and that's, you have to have a big enough sales volume and customer base to be able to justify that. But yeah, absolutely. That's been the biggest thing in the last 25 years. You just, especially with these states opening up, Georgia, for example, last year they only allowed brick and mortar stores the first year. Now they're allowing stands. But, in your larger metropolitan areas, it just makes it a lot easier because a lot of moms won't feel comfortable going into a tent or those locations just the way it is. So it's definitely been a big movement in the fireworks industry in the last few years.
All right. Well, to wrap up, we've talked about fireworks and retailing fireworks and all of that, but I want to get down to the fireworks themselves. Just out of personal curiosity, what new developments are in store this year in the fireworks industry? Are there any different fireworks that you guys are carrying?
A lot of the new 500-gram cakes, and that is, the largest amount of powder you're allowed in what we call a multi-shot item, where you light it once, it's going to go up 20 times with lots of different effects. Those, they've come along in the last 10 years and really just been, huge for the industry. And the other thing we see a lot of is a lot of people go together with all of their neighbors now, and where they're all coming together and having a cookout or what have you. Everybody throws $100 in the pot, and they go and buy $600 worth of fireworks, to where it's not everybody going and spending $100 and getting some small fountains, some firecrackers, those kind of things. Now you get this wide variety with a lot of night work, so that the kids and the adults can sit back and watch it and really put on a great display, that 4th of July night.
Jason Marietta, the retail sales director at Jake's Fireworks, thanks for shining a light on this for us today.
Absolutely, and everybody have a safe 4th of July.
As always, we may have a position in or against companies we discuss on the podcast. Do not invest in stocks solely on the input of the podcast hosts.
We thank Jason of Jake's Fireworks for his time. I know this is a busy time of year for the company as they prepare to open all of those fireworks outlets throughout the United States over the next month plus. Should be adventurous for the folks at Jake's Fireworks in the lead up to the July 4th holiday here in the United States. Well, as we do every week on the Retail Focus podcast, we wrap up with a couple of stories that we're looking forward to. And Leighton, we'll start with yours.
Yeah, something that caught my eye, Trent. Kroger is now partnering with a Detroit-based health systems network, Henry Ford Health Systems. They own 6 hospitals there, headquartered in Detroit. They're going to be coming together in a new partnership to have registered dietitians give advice on every Wednesday now through the end of September, to give customers coming into Kroger locations at all 126 Michigan Kroger locations the opportunity to discuss health and healthier ways of eating and shopping. What this is going to do is it's going to have registered dietitians kind of pave the way and explain things, the health contents of certain foods, and then also kind of try to have people understand that you can still cook in a healthy way and have it taste good. So this is a true collaboration between Henry Ford Health Systems to try to get people motivated to eat better, eat cleaner, if you will, and then at the same time having Kroger push sales of their healthy foods and make consumers happy that way. So this is going to be interesting going forward. In essence, it is a pilot program, having it only be through September. So I'm curious if this has any success and they keep it implemented going forward past the September month.
And keep in mind, we've talked before on the Retail Focus podcast about Kroger's increasing push to try and jump at market share in the Michigan area, much of which currently owned by Meijer Company. Well, I'm looking ahead in a couple of weeks. They'll have the Retail Asia Expo, and basically this is a huge expo in Asia to be held in Hong Kong this year from the 14th to the 16th of June. And I'm interested to see what technologies are debuted or shown off at the expo. There's a lot of different topics that will come up, most of it relating to digitization of retail and omni-channel topics, but also a number of other innovative technologies for mobile wallets and cloud-based retail. So I'm anxious to see what comes out of this year's Retail Asia Expo held in Hong Kong in a couple of weeks. Well, for Leighton, I'm Trent. Thanks for listening to the Retail Focus podcast. As always, you can subscribe to us on iTunes, Stitcher, and a number of other podcast resources such as Podcast Addict and Podcast Republic. You can also check us out on YouTube. Beginning last week, we'll put all our podcasts up on YouTube so you can access them at any time there, as well as archived episodes, which will be up in the next couple of weeks. We'll see you next week on the Retail Focus podcast.
This has been the Retail Focus Podcast. For more, visit our website at retailfocuspodcast.com and subscribe on iTunes or Stitcher. Follow us on Twitter at Retail Podcast.